Hi everybody, Brian from Bear Bull Traders here. It is the weekend, September 10th. This is the weekend video. We'll talk about what happened last week in the markets and what's coming down the pipe this week. It's going to be another interesting week with the CPI number coming out on Tuesday. Everybody's going to be watching that. So let's get down to taking a look at what happened last week. So week of September the 4th last week, it was a shortened trading week. And if you caught my previous week's video, you would have known I was watching for a bounce after being down 3 weeks in a row on all the indexes, and we did get that expected bounce. So I actually moved my swing trade positions from bearish to bullish this week and got a nice bounce on that. So PMI and jobs reports were both viewed favorably this last week by traders and investors, and we got a nice bounce on all of the indexes. They pretty much erased all the losses from the previous week here, so these numbers just flipped from negative to positive when I went through them. For the most part, give or take. So where were we strong? Where you would expect. We had materials, discretionaries, and financials were some of the biggest winners. Financials benefiting from rising interest rates. Some of the stocks that are sectors that were down, not or gained, but not gained as the least. They gained the least. Were the defensive and communication services. Defensive, of course, people tend to rotate out of those when you have a risk-on week, and that's what we had. The 10-year note, as I mentioned, edged up again. We'll take a look at those charts in a minute, and so did the 2-year. We're getting up to retesting those highs that we tested previously in the year. We still have an inverted yield curve, sort of a precursor for possible recession. Not 100% predictor, but often viewed that way. The US dollar, obviously, it dropped this week, and I think it was primarily because the other central banks around the world were aggressively raising their interest rates. So, and that was why the US dollar was going up when the other banks were silent, and now we had some of the other central banks sort of coming in there and raising their rates as well. So taking the US dollar down on the week. Bitcoin, of course, Bitcoin just seems to be trading as a risk asset, and it's up over 21,000. After dipping below 19, I believe this early in the week, it really turned around as well with the rest of the markets here. And before we get to looking at some charts here, as always, I'd like to do a quick ad for my book on Amazon. It's the new book, Profiting as an Active Trader: Rules, Strategies, and the Routines of an Active Stock and Options Trader. So you can check it out on Amazon. Okay, let's take a look at some charts here. So we'll start out with the 2-year and the 10-year treasuries. As always, like to keep an eye on those because they're the dog that wags the tail of the market. And you can see here we are just grinding higher on the twos. You can see this is the weekly chart of the 2-year yield, just slowly grinding higher as traders are anticipating higher interest rates in the future. And same with the 10-year. We're coming right back up here and just retesting this prior high, and looks like we might even be close to breaking above it. This closed below where we closed on Friday, so actually closed at a new high. So anyway, again, still in an uptrend, still creeping higher here, and not really surprising. The transports, really good day. Just put some bottoming action here. 3 days sort of bottoming with these doji candles, and then popped right back up to the that 50 moving average. So nice bounce back on Friday. You can see these are pretty heavy volume days, heavier than average. And on a week, again, a nice bounce back after this this sell-off here, these 3 weeks of sell-offs. And we could be putting in a higher low here, so something to keep an eye on, and I think a lot of it's going to hinge on what the CPI number ends up coming out with on Tuesday. The Dow, 3 nice back-to-back days here of gains, and again, just bouncing off some area where we were anticipating some support down in this area right around here, and so I had mentioned last week. And again on the week, kind of may be putting in a bit of an inverse head and shoulders here. Here's your left shoulder, there's your head, and possibly the right shoulder on this side. So Again, this area has become support, sort of 31,000 level on the Dow. The Qs, sort of same story. I don't want to keep repeating myself here. Nice bounce back in those last 3 days. And again, on the week, we are just recapturing some of that losses that we had over the last 3 weeks. And you can see here the volume was a little bit lighter on the Qs, so maybe not as much conviction. The SPY, same story again. And again, compared to previous weeks, the volume was pretty low on the SPY. Of course, it was a 4-day week, so you have to take that into account. So maybe the 5th day would have taken it up close to last week's volume levels. And the IWM, again, same sort of story here. We have, recaptured this 50 moving average, and coming up to the 20. Well, the momentum indicators seem to indicate we are getting ready to move higher. Momentum on the RSI is going above 50. And again, sort of same story here. Recaptured this 20 moving average, and we're still above the 200. So still looking fairly positive on a weekly basis for the small caps. The VIX is actually, again, 3 significant down days. Not surprising when we get 3 up days on the markets. So 3 down days, and again, we seem to top out around this 27 level here on the VIX. So we've pulled right back here, and possibly heading lower, which means the markets will likely rally some more here. The dollar, as I mentioned already, well off on Friday as Europe and other central banks have started to raise their rates. You can see on a weekly basis here. Again, big. We were getting really extended from these moving averages, and you can see what happened the last time we got really extended. To pull back, so I suspect we're going to again pull back. This uptrend is still intact, but again, got really extended and was expecting a pullback, and we got that on volume as well. So let's take a quick look at the at Bitcoin. Again, Bitcoin seems to be had a pretty big day Friday, and sort of continuation here into the weekend. You can see here we're up around 21,700 now, after dipping back down below 19,000. So yeah, Bitcoin seems to be stuck in a bit of a range here. So let's wrap things up here, or move forward here with a few things I'm watching. Apple, I took a little bit of a small position on Apple after the report, and it still seemed to hold this 155 level. So took some long on Friday, and I'm holding a small position on Apple and looking for a bounce, maybe back up to 160, and we'll see where it goes from there. Baba, I still haven't entered him, but I still think this 88 level is support, and at some point Chinese stocks are going to start to improve once we get past this the repeated COVID lockdowns. But I'm just not sure what's going to happen here. Boston Scientific, I was looking at, came up in a scan, and you can see here it's had a pretty big, pretty nice pop up here. Came but right back down to retest this gap level, held, and then the last 3 days it was up quite a bit. So I'm going to set an alert at 42, somewhere around this 200-day moving average, 41.50. And look at possible entry here, because it does look kind of interesting. Boston Scientific, COF, I'm just keeping that one on watch. I think it could be a decent short if we really market really starts to roll over, but at this point I don't see it doing that. Disney again seems to have come back, filled this gap here. That's typical gap fill. Back to the 110 level, and that is your support there now. So again, we'll see what happens after Tuesday. I think all the stuff that's going on in Europe and Germany, and the energy problems. I think at some point this is going to be a really good buy opportunity. Possibly start to nibble here on Germany, and because they'll eventually this energy crisis in Europe will be resolved one way or another, and Germany always finds a way to come back up here, and so I think there's some definitely opportunities in the future. Again, I was watching this one. This was on my watch list last week. I didn't take it long, unfortunately. We had a nice pop up, but again, the uranium play, and I'm also in CCJ, the uranium play as well. So this is anything alternative energy came up quite well last week. Seemed like Plug, ChargePoint. This is another one, Pure Storage. They all did fairly well last week. It looks like it's on the verge of breaking out of this 31 level. So set an alert there. And then this is where I flipped my position from short to long last week, as when it became apparent that I think we were going to bounce. And so still have a little bit of TQQ left, and just holding that over the weekend and see where we go. I'm not sure I don't know if I'm going to hold that through the Fed release, or the CPI release, I should say, not Fed release. And of course URA, which is ETF for uranium. If you don't want to play something like CCJ, Cameco, you can get exposure to a number of uranium companies using this ETF. And that's about it. So let's wrap things up here and look ahead for the coming week, full trading week, all 5 days. We've got the Dow back above some key support levels, and those are the numbers I'm looking at here for support and resistance. And as far as economic events that are coming up, of course, I was mentioning the CPI. That's going to be a big one that everyone's going to be watching. They're going to be watching for a decrease in inflation. If we get a high number month over month, I think it's going to be very discouraging for the markets. I think if we show a decrease in inflation, significant, I think this will be a positive for the markets, because I think even though it probably won't change the Fed's mind in terms of their aggressiveness, I think there's sort of a lot of people out there with the rose-colored glasses on. So I think if we do see a decrease, I think people will take it as a very positive sign that maybe things are getting under control. Wednesday, we've got the PPI number, the Producer Price Index number. That'll come out before the market open as well, but this CPI number, I think, is sort of the one everyone's going to be watching. Fed quiet period. We know we've had a lot of talking heads with the Fed here over the last couple of weeks, but they've gone into their quiet period because this next meeting is coming up, not this week, but next week, Wednesday and Thursday. So, of course, that's where we get the big decision on the next rate hike. Most people are expecting 0.75, so odds on 0.75. With a little less on 0.5, but increase nonetheless. And of course, we've got a very light earnings week coming. We've got a couple weeks before we get back into earnings season again. So Monday, we've got Oracle after the market close, and Adobe, I believe, after the market close on Thursday. There are some other ones, but these are the main two that you want to watch. So that's it, everybody. I hope you've had a good week so far, weekend, and I will be kicking things off as usual Monday morning, 8 o'clock live on YouTube if you want to join us there. And of course, Trading the Market Open at 9:30 with all of our members. So enjoy the rest of the weekend, and hopefully we will see you all Monday morning. Bye for now.